Welcome back. So the mid-cap market is still reeling under some pressure, still down 1% on the mid-cap index, and the advanced decline ratio is also still poor. Not much recovery there, just about 1,900 stocks that are declining and about 370 that are advancing. Let's talk about some of the movers and shakers on the mid-cap screen. Apart from the nifty names on the commodity side, stocks like Nalco also are having a good session today. Manisha was just telling us about the rise in aluminum prices, and that seems to be working well for this counter. Vodafone Idea has managed to put on 2% after, and this is on good volumes, of course, this is price and volume action. This obviously after the infusion of equity is coming through from promoters. So that's a stock on the radar as well. Now, let's get you a big call on the market, and this is coming in from Rhythm Desai, and it's worth noting. He's saying in temporal terms, this market is aging, but it is still young in terms of returns, especially because we see some distance for the earnings cycle to go, driven by some surprising changes underway in India. Therefore, this is said to be India's longest and best bull market ever. Stay invested. That is a view coming in from Rhythm Desai of Morgan Stanley. That was, of course, the equity call of the morning. Let's now take the conversation forward. We have Amit Khurana joining in, head of equities at Dolat Capital. Amit, I don't want to put one against the other, but since we were just reading out that big call from Morgan Stanley, let me start there. I mean, do you concur that this bull charge still has more legs and that every dip, like the one perhaps that we're seeing today and on Friday, that all these dips should be bought?
Well, yeah, I mean, completely agree with that. I think what we are undergoing is a very significant structural shift for the India economy, a very structural shift on the corporate balance sheets, part of which is already reflecting the valuations, the way India has outperformed and every dip has been sort of bought into. So big picture, completely agree, except the caveat that you will have bouts of profit booking, one, and bouts of volatility, which will challenge these assumptions. And of course, as the developments on the global earnings, global macros, India earnings play out, there will be reallocation of weightages that you may want to do on the portfolio or on the stocks, which will be a more active sort of style of managing the portfolios and expected returns. So I think leave alone that part, largely the direction, I think from a 12 to 18 months perspective for India equities continues to be constructive in our view as well.
You know, Amit, you mentioned global, and one sector that is reacting at the extremes to the global developments is metals. With all the restrictions over the Russian metal imports on the LME, the stocks have been shooting through the roof over the last fortnight or the last month or so. But there will come a time when this situation will normalize as well. Now, do you see this entire sector just as a trading play, or has there something that has been a fundamental shift in a lot of such stocks? And if so, which among the ferrous or the non-ferrous names that do you prefer within this metals basket?
Well, yeah, so let me qualify that. I think it is more of a tactical play. That was our view. Even before this news flow came out, we have been pushing metal stocks purely from a tactical perspective. Whether it becomes a structural play, I think will depend upon the demand outlook. Remember, you still have a situation wherein demand outlook for some of these segments has not been as bullish as usually you would have expected in a global growth scenario that we are in, where US is doing pretty well. You have most of the emerging markets in a mixed picture, and India domestic demand has been pretty robust. Now, it will all depend upon how the next 6 to 12 months of outlook on the demand scenario works out. Our take is that one should be playing more on the non-ferrous, given the news flow on aluminium, which relatively was an underperformer if you look at it in the last couple of years. The ferrous sector had outperformed pretty well. But from now onwards, given the news flow and purely from a tactical perspective, it seems to us that the non-ferrous will be the space to watch out for.
Right. I want to talk to you about these gold financing or gold proxy plays as well, right? Not necessarily gold financing, but Titan, Kalyan, Senco, all of them came out with business updates recently. Senco is on a tear right now after the business update that it put out. Kalyan also saw 30% plus revenue growth there. Do you find value in any of these three names? Titan, as always, has been an expensive stock, but does these kind of levels or this kind of growth justify the kind of valuations it's trading at, or would you wait for a correction before you even turn positive on these names?
Well, there are two ways to look at it. So let me put that in context. I think the numbers that we are witnessing are Q4 numbers, and the gold prices have gone up very sharply towards the end of the quarter. I think the ramification of that higher price impacting demand will play out in Q1. And to what extent it plays out, we have to see. Our sense is that the companies will be more guarded in their earnings commentary when they put out those earnings formally and they talk to the investors at large. We sense there will be a bit of a caution over there. We haven't yet seen the footfalls falling to that extent. And of course, Akshay Tritiya, which falls in the month of May, will probably offer some evidence as to how much of an impact on real demand it has made. But I think it is time to be a little cautious because there tends to be a little bit of a readjustment on the consumer side. People tend to have fixed budgets. So the grammages tend to go down when there is a certain spurt in these prices for gold and other precious metals. Wedding season still continues to be pretty strong. So we will have to see, but my sense is it is better to be cautious at these valuations and wait as to how the higher levels of prices impact the volume throughput, which is probably more relevant for the companies to drive earnings and valuations.
Speaking of metals, let's move from precious to actual base metals, right? There's been such a roaring rally. This year, the Nifty Metal Index, Amit, is up some, I think, 19-20%. And this is on the back of a strong 12-month period in any case. Have you participated in the metals move? Would you still ride it, still join it? What's the advice?
Yeah, we did. Which is the point I was making earlier. We were more bullish on the ferrous side earlier, but given the latest development, it seems non-ferrous will probably do a catch-up. Remember, this large part of the outperformance on metals was a slightly contrarian. It was pretty skeptical. And it was largely driven by domestic names. It was only later that the sort of the more diversified names caught up. But you look at the domestic names; they are done pretty well, largely led by the domestic demand. So I think it will continue to be a tactically an opportunity to play out, and more on the non-ferrous side as I see from here on.
Pleasure speaking with you as always, Amit. Thanks a lot for joining in and sparing time and sharing your views on the markets and the sectors that you like or you don't as well. Thanks a lot for joining in. That was Amit Khurana from Dolat Capital. Time for a short break here on Trading Hour. On the other side, we bring you excerpts from our special offering, Market Cafe, where Ashok Wadhwa from Ambit Capital discusses the centre's latest move to amend its tax treaty with Mauritius. Stay tuned. We'll be right back.